many of you have asked us to hear about reading credit reports. We had a presentation last year that was very well attended and we hope listened to. So we are going to present this again, and Elizabeth Ureña, where are you, Elizabeth? Is an expert in this. There's probably no one that we know that understands the credit reports better than Elizabeth. And remember, if you get a report, if you can't read it, you know, you paid for a report for nothing, and you may not have prevented a bad loan. Elizabeth, dear. Can we have a volunteer distributor?
Good morning, everyone.
Good morning.
Thank you. Thank you. The package that you are receiving today is actually the same package that I wrote last year. Many of you were not here when I did the presentation, so Joy asked me to bring 25, so if there's not enough, just let me know, and I will prepare a package and send it over the next. The first page of the package is actually a copy of the credit report. Do everyone has the credit report? Yes? Nowadays, as you guys know, credit report is really important. It's the number one asset. That's, as I say, it's the master key that opens many doors. It will determine, you know, the cars that you drive, where do you live, or where do you work. So it's really important that you understand your credit report. The first page of the credit report that you have, it has some numbers, explain all the information that you're going to find in your credit report. I'm not going to go over because it's actually straightforward. Okay, so just flip the page. This is actually a copy of the credit report that I brought from Equifax training that we have a couple of years ago at Bethex. So we will start doing, you know, using the new services of Equifax. The first information that you see is the Beacon score. Beacon score is really important when you're going to determine the price that you will pay in many items. It could be to buy the car, for an apartment. Also, it will determine how much you will pay for your car insurance. Because as many people know, nowadays, it's really important that you keep your credit report in good standing because it will determine how much you will pay for that auto car that you have, the insurance and everything, okay? So the credit report has many information. As you can see, you have person's name, social security number, date of birth. It's also scan your information to see that any kind of fraud in your credit history. It will actually explain absolutely everything that it will appear in your credit report. So I'm not going to spend much time explaining it because it's actually straightforward. Now, I'm going to speak about major reasons why you must have your good credit report. As I said before, to apply for mortgages, car loans, Even for secure loans, a lot of major banks are running your credit report. So if your credit report is not good, they might deny you, even when you go to apply for a secure loan based on your own money. Also to apply for jobs. Now their credit report is really important because a lot of companies are using the credit report as part of the criteria to determine if you want to be eligible to get that job or to be promoted in that job or even to keep your job. To open accounts. Actually, a couple of months ago, I went to a major bank and I see a sign that says that they're going to run your credit report to see if you are eligible to open an account. So if you have bad credit, unfortunately, major banks are not going to open an account for you. The car insurance. As I said before, many companies, not many companies, all of them are running a credit report. They're going to determine the price that you will pay for your car insurance based on your driving history and your credit report as well. Telephone company, many major telephone companies are running the credit report to see if you are eligible to get the contract with them and get a free cell phone. A lot of them, what they're going to do, you have bad credit, they're going to ask for a deposit or for all the requirements. Now let's go over the other portion of the package. That's another page. Okay. Here you will see the FICO score. Everyone has a page? The FICO score is actually explained here. Above 750 is excellent. A lot of companies, what they do is they use letters instead of numbers. So 750 and above is an excellent credit score is an A paper, as many companies call them. 700 to 750 is a very good credit report, which is a B paper. 650 to 700 is good credit, a C paper. 600 to 750 is bad credit. Below 600 is, unfortunately, really bad. The following page is also the FICO score. FICO score range between 300 to 850, with a median of most American has like 623. So if you can see that in that page, it gives you the average of credit report in the United States. It's 800, and above it, 13% of the population may have it, 750 to 799, 27%. 700 to 749, 18%, and so on and so forth. So if you continue reading in the same page, that page has a general formula how the credit bureau calculate your FICO score. Based on your payment history, it's composed 35% of your FICO score, amount that you owe 30%, level of repayment history 15%, type of credit 10%, new credit 10% also. So it's going to add to 100% information in FICO score. The following page actually is the thing that you learn from the FICO score. Yes.
Is it say you have a credit card for $6,000 and you only have $300 credit?
Capacity is key. It's meaning like the more credit available that you have is better. They said that you have a $10,000 credit card. If that credit card is maxed out, so you have nothing available. You have no capacity at that time. So you must have at least 30% of your credit limits available. Yes? Okay. The capacity.
Yes, I just want to ask about amount you owe capacity. Does that mean if you had a $6,000 credit card and you only use $300 of that amount, is that good or bad? So
it is good because if your account is $6,000, you just spend $300, you have enough available. What you must have is at least 30% of the limit of your credit card available. Okay, that's the thing that you learn from the FICO score. The model is not affected by number of credit cards or limits on credit cards. Inquiries are not a big deal, but when you see a credit report that the person had like 30 inquiries within 5 months, it's kind of scary because the person is actually desperate to get credit. So you have to be aware, let's say that you are applying for anything, in loan or whatever, make sure that you don't have so many of those inquiries because the lender might think that you are just desperate looking for credit. Okay, two members that have the same credit score and different risk position. In here is actually, a couple of days ago, I ran a credit report. The person's credit score was 691, which is actually good. But when I look into the credit report, the person had judgment, collections, they have so many items. So do not go by the credit score itself. Just look into the credit report to see why the score is like that. Or you could have a person that have 700 credit score, and the person was really good because have no many accounts with balances. So when good or bad credit reports is very important to the score. So it impacts your credit score if you have good accounts or bad accounts. So what you need to do is try to manage your credit wisely. The following page, I give you some tips, FICO credit score tips. I don't know if you guys know that, but in order for you to build your FICO score, you need to have at least 6 payments are required to start building your credit score. Let's say that you just open a credit card today, and you use the credit card and you paid it off within a month. They're not going to give you a FICO score. You need at least 6 payments because the creditor needs to see that you are able to manage their account in an appropriate way. A denied loan has no impact on your FICO score. Debit card do not build credit. It's because it's basically your checking account, you just spending your own money, so you not build credit by that. Credit considered is treated as neutral. The model is not affected by a high number of credit card accounts. Bankruptcy, unfortunately, is the worst thing that could happen to the FICO score. It will destroy your FICO score. Chapter 7, 11, and 12 bankruptcies will remain in credit report for at least 10 years. Chapter 13 will remain for 7 years. All other legal information credit report will remain in the credit bureau for 7 years. But there are some creditors that reaffirm the debt. You need to be aware of that also. A current version of the FICO score authorized user accounts on a credit report are included in the score. If you are a cosigner in the loan, you have to be aware that you are responsible for that debt. So you have to be careful when you are signing for anybody for a loan. It could be a student loans, mortgage, auto loan, any type of accounts that require credit report involvement. So you have to be aware of that also. When payments are due a student loan, they are now part of the credit calculation. Let's say that you have a student loan, the student loan is in the firm because you are in school, it does not affect your credit score. But when you finish school and you start repaying your loan, it will affect your credit score.
Question.
Yes.
How will the credit union...
Hold on.
Thank you. How would a credit union report a delinquent member to the companies that
Actually, you will need to have a contract with one of the major credit bureaus in order for you to do the report.
That's the only way.
That's the only way. You need to, if you want, I could try to get you more information on how you could get a contract with the credit bureaus, because in order for you to report it, you have to have a contract. Otherwise, you will not be able.
And if you don't have enough, if you don't generate enough for the year, it's not cost effective for the credit union to have a contract.
Let me ask a question. How many loans do you have at this moment? Your credit union?
And
15?
the number.
We actually looked into this in the past. One of the challenges we have is that the credit union needs to have a loan portfolio of, I think, at least 100 before they can have you report to them. Joy, do you want to say a few words, because I know we tried this in the past. I don't know that, I think we made it anywhere with Equifax. And what's the name?
Everybody looks into this after I tell them the way it works, and after I tell them the way it works, and they all come up with the same answer that I tell them in the first place. For years, we have been trying to get credit unions to have the FICO and the Beacon and all the important scores. What happens is this. Years ago, there was no problem, and everybody used to put in their reports under Bethex. And Bethex, because we have a very large loan portfolio, was able to come up with scores. What happened one year was we put in the request on behalf of a gentleman, and he later on got a copy of his report, and the report said that Bethex was looking into his credit score. Bethex can only look into credit scores for Bethex. Fidelis can only look into credit scores for people who borrowed from Fidelis. Privacy situations. So we had to call that credit union, get them to write a letter to that gentleman, apologize to him for, putting in the loan under our name. And it ultimately got straightened out. But we stopped putting you in under Bethex. The minute we didn't put you in under Bethex and we put you in under your own name, they said, you are too small to qualify for that piece of information. For years, I have been calling, trying to make a contact and say to them, there are so many people with loans that you don't know about. You are selling information to other people that's missing this information. They don't care if you are too small, if your loan portfolio is too small. They they'll give all the information, but they won't give the score. My suggestion is, well, first of all, what I'll say to you is, I will keep trying. Maybe they will ultimately take everybody. But in the meantime, study what you got. You can really know just as much if you look at a credit report as you will learn if you know the FICO score. You look at they all will tell you how many times the person was late. They will all tell you if there was a repossession. There's a lot of information besides that. And in fact, I, for one, don't think the credit score is the true credit score and the FICO are the same thing. And I think what happens is you are so used to buying a credit report, and then if you see the FICO score, you say, oh, he's a 500 or a 700, he's no good or he's good, or you get no FICO score and you think you have no value in what you bought. Look at that report. Sit down with the person. Ask him, why did you pay late here? All that information is there, believe me. Why they're late, how many times they're late. It's all there. The FICO score is a number that you can live without. I really mean that. What I would suggest is next time you buy a report, call us up and let us go through that report with you so you see that it is very valuable with or without the score. Do you agree with me? You know, one last thing. If I get your paper, I'm going to give you a loan, and I see that you have 500 FICO score, I would look into the report, this is in Bethex, and I would say to the member, why do you have such a low score? Why were you late so many times here? What was this problem? Explain it to me. Sit with the borrower. Don't use any score or any number as the end of the line. Your job is to make the loan if you can, and not to jeopardize the credit union's money if there's no way you can make the loan. But I will again try to get you the FICO scores.
Let's continue. As Joe said, just whenever you receive a credit report, just look into it. Just do not focus on your FICO score. Because as I said before, I just rolled a credit report a couple of days ago. 691 score. But when I look into the credit report, the member has judgments, collections, liens, the person even owes taxes. And the FICO score was 691. So do not focus just on the score. Read through the credit report. Look absolutely everything. The credit report gives you everything. Name, addresses of the person who used before, all the names. They even verify the Social Security number, the state where that Social Security number was issued. So just, look into completely, not just in the FICO score. Now let's continue. The following page has actually items that hurt your FICO score. Late payments is one of the that unfortunately many people have been having issues. Sometimes you just forgot that the payment was due maybe the 25th of the month, and you forgot it completely and you just paid it a couple of days late or whatever. A couple of days does not affect the score, but if you paid it more than 30 days late, it will affect your score. You need to lower the percentage, a low level of percentage available. So that's what we were discussing before, the questions. So in accounts, you must have at least 30% of that limit available. Close your revolving accounts. Do not close your credit cards, only if the credit card is, charging you an annual fee. That's what I recommend. Otherwise, you could keep the account open, but if they charge you, unfortunately, you will need to close it, to save money, even though your FICO score goes down a little bit. Having lender lower the limit of revolving account, that's another issue that also affects your score. Let's say that you have a credit card for $5,000 and the lender just decide that you don't use the credit card, and they lower it to $300. It happens to me. I have a credit card, $5,000, I decide I'm not going to use the credit card. And the bank lowered it to $300. So my score went down a little bit. But at least I don't have that credit card. I'm not going to use it. I just have it there. Multiple non-revolving accounts in short period of time. That's also hurt your credit score. Setting a debt for less than the full amount. So if you have an account that is maybe in collection, you will suggest to accept the settlement from the creditor. It will lower your credit score also. having loans as second-tier finance company. There's actually accounts that you have, let's say your Macy's credit card. Macy's is not the one who's giving you the credit card. It's actually a bank who is giving you the credit card.
Question?
Yes?
If a person is, thank you. Say a person is legally in the field of membership, that is from West Africa or somewhere and doesn't have a social security number, can they build credit? Can you get a score on them if they've been here a while?
The only way that they can build credit is that they will need to have an ID number.
What ID number do they use?
They need an ID, apply for the number. The government, let's say that you come, your credit bureau information is accurate. If you think that you have an error in your credit report, you need to try to solve that issue. Actually, the government does give you once a year a free credit report. So I advise you to every year request that credit report and go over all the accounts that you have to make sure that every information in there is accurate, that nobody is using your identity or you have some other accounts that you forgot it all about.
Where do you get that?
Online, annual credit report. Actually, and this guy that everyone has it, has the website. That's one of the last pieces of the package. As a building a better credit report. You had the website, and also here give you value information on how to avoid identity theft. If you have an account that you want to dispute, even give you a sample of a letter. So in here, in that guide, which is one of the last pieces of your package, has a lot of value information. And as I said before, the website where you can just go and request a credit report. That's for free. It's once a year that the government gives you that.
They won't give you your FICO score, but they just show you your credit report so you know what credit card you have and everything.
Exactly. As she said, it do not give you the credit score, but it will give you everything, all the inquiries, all the accounts, revolving accounts, loans, student loans, everything. Let's continue discussing the strategy that will improve the FICO score. Now, focus on bringing current accounts. Let's say that you have a delinquent account or past due account. You must bring that account current to avoid, even hurt more your FICO score. Payors close second-tier finance company trade lines, which is basically those credit cards that many major banks, major stores give you that are not financed by them. They are basically financed by a bank. Pay down the credit cards first that are near the limit. So if you have an account that is actually $1,000, you owe $999, so try to pay down that credit card as fast as you can. Pay down total revolver balances, but do not close the accounts. So remember that. Move revolver balances to installment debt, but again, do not close the revolving account. So you could transfer from one account to another, but do not close the account because it will actually lower the credit score.
I have a question. Okay, say you have a credit card with a company that is charging you an annual fee, but they have an option of a credit card.
He's going to talk about capacity, which is really what you're asking. If you have 3 credit cards, the limit is $3,000 on one, $3,000 on the other one, and $3,000 on the other one. You have a combined credit limit of $9,000. Let's say you use the entire $9,000 on the credit card. You've maxed out your capacity on the credit score, and that lowers your score. What is typically recommended is for you to stay within 50% of your credit capacity, which means if you have the 3 credit cards and you want to use $3,000 on the credit cards, then your capacity is 1/3, basically 1/3 of $3,000 over the $9,000 you actually have. If one of the cards are closed, that lowers your capacity because now instead of, let's say, out of the 3 cards, one is closed, your total capacity is now 3,000. And if you have a 3,000 balance, that means that your capacity is now 50%.
So I understand that it's more about the annual fee. Is it beneficial to have a credit card without, okay, you have a credit card that has an annual fee with that company also offers a credit card without an annual fee. Is it beneficial to go ahead and apply for the non-annual fee credit card and then close the account that has the annual fee? Is that better? Not about capacity, but the annual fee, because you're saying closing a credit card has a negative impact.
So closing the card has a negative impact on the capacity. I think the issue with the fees card, it's an issue of maybe getting a better credit score or rewards.
Okay.
And so personally, I would get the cards with the rewards. If I've got to pay an annual fee, then you know what? I've got other cards that have rewards without fee. So I think there's a capacity you want to look at. And would the card with the fee give you a higher credit limit? Because that increases your capacity. It increases your ability to buy more. Again, it also increases your capacity to get into more debt if it's not used properly. So it's a double-edged sword.
Thank you, Melody. The next page that you're going to see is actually it's like a little summary of everything that we just discussed. Explain everything here. Understanding the crossroads that lead to explaining the score. So it is basically a summary of everything that we just discussed. Then, as I said, you also have this little booklets in your package, which also give you a website where you could go and look for more information. This booklet is really, good. I'm not going to go over everything because it actually would take me the entire time. So I think it's that other people who's going to be presenting. But I will advise you to please read it. Have a lot of value information on how a voice can, because there's a lot of companies that they're going to do debt consolidation, that they're going to delete information for your credit report, and sometimes this is not really true. It's a scam. So I advise you to please read it. There's also, as I said, have the information for the credit bureaus, have the website where you could go and get your free credit report. In the package, you also have a list of major credit bureaus, which name, the company name, addresses, and telephone number, also website. Also, in case that you think that you have been having some issue with identity theft, is also a website that you could request information or even protect, your credit report. Did anybody have one copy of this? It's supposed to be in this little booklet. That's the last page in that little book. Now, the last page in the entire package is something that I just found last night on the internet, which is basically 5 things that you learn by having bad credit. Oh, yes.
Where's that?
That's the last page.
Oh, that is that.
The last page in the entire booklet. This must have been. I'm sorry.
This.
Here.
Oh, okay. Got it.
Yeah. This actually is for information purposes only, so I advise you to please read it. Do anybody have any questions?
So let's say I want to come and fix my credit score. How long would it take me to raise my credit score 100 points? I mean, obviously there's a lot of variables, but how much could a course actually help somebody?
If you want to improve your credit score, there's a lot of ways to do it. Paying, collection account, paying down your credit cards, also applying for secure loans or secure credit cards. We actually have a loan at Bethex that's called Gold Survey Loan. that it will boost your credit report. It will take you a couple of months to actually improve your credit score. As I said before, it's actually taking 6 payments to improve your credit score. So
How much could it like potentially improve your
it's all depends. I cannot really tell you how many points it will go up, but it's all depends.
Andrew, I just wanted to say, because that's an excellent question. Typically, if you think of yourself as the lender and you make a loan to one of your buddies and he doesn't pay you back, do you think you'll be as friendly when he comes back next time to ask for another loan? Well, that's what it comes down to. Honestly, I mean, that's exactly what it comes down to. When the credit card charges off the card, that's because the borrower completely ignored the borrower and has decided not to pay them back. And that's why it says on the credit report, because they want that information to be shared with everyone else. So if you want, to build your credit, you really have to start thinking about, you know what, if I ask someone for a loan, they really want me to pay it back. It's really not my money. I mean, I know people that get money from the credit card and they think it's a God-given thing. It's not. It's someone's money and they want to pay it back. The other thing I wanted to say on the credit cards, typically it's often recommended that you have 3 credit limits, 3 credit lines is what they call. 3 credit cards you could actually use, and it'll help build your credit by typically having more than 3. It's a little risky. Having less, it doesn't look really good on the score. The other thing I like to say from a personal point of view is, I happen to have a couple of credit cards, so 3, 4 credit cards. I never max out any one of the cards, and so if I have 3 cards, I think I tend to stay within 50% of the credit limit, just in case the credit card company decides to lower the available balance on me, then I'm at 100% max out on that card. So I think that's a strategy you can use going forward, and like I said, wanting to monitor your available credit with your overall capacity helps build your credit score.
Any other questions?
Does someone have a question? Mary?
It's a little different than what we were just talking about. The debt ratio.
And then you mean the next information that we do when you are evaluating a loan?
Yeah. Can you go over that, please? Like, what percentage of the income?
It all depends, because like a Bethex, our maximum is that we could go is 45. We cannot go over 45.
So is that 45% of their income?
Of your income go to your expenses. You cannot go over it.
So it's 50%. If you overextend.
50%, that's a loan. That's
a bad loan.
No, it's not bad loan. It's risky. What you could do is try to ask the person if there anybody helping to pay the bills, because sometimes they have a rule that they're renting and there's an extra income. If they don't want to disclose it or you let you know, because they might have Section A or stuff like that. You could ask them those questions, because sometimes they wrote in the application that the rent is $1,000 and they receive a Social Security 761 or 721. You know that they are not able to pay that rent, that they have somebody else to help you. So basically what you do, you ask questions. Whatever they wrote in the credit report, in the application, you go asking, how come you pay $1,000 rent where your income is only 721?
So if it's 40
and up, you will need to start asking questions.
I want to throw in something, sort of a counter to Fred. I think straightening your credit or maintaining your credit has to do with your personality. I think some people are better off, as Fred thinks, with 3 cards. Joy thinks 1 card is enough. And I'm a lot older than Fred. But seriously, when you have more than one card, this is what happens. You go into the restaurant and you see something that if you had one card, you'd know I can have a hamburger tonight. If you got two cards, well, I can have a hamburger, fries, and maybe shrimp on the side. If you got three cards, you can have a steak also. So, in other words, you know how you are. When you pay the bill that comes for your credit card at the end of the month, you know that, well, that's how much I spent on this. But how much did I spend on the other one? And you can't, if you're Joy, keep track. I didn't start to get control over my card, until I got rid of all the others. The others were killers for me. So it's just your character. If you're Fred, you can have 6 cards. You know how to, keep the lock on them.
It's behavior.
Yeah, Mary says behavior.
You absolutely right. It's behavior.
So that's an excellent point. The caveat to my comment is actually it's behavior and control. Having all the credit in the world doesn't mean you have to use it.
I have 2 cards, but the reason why is because I travel overseas, and sometimes one card won't be accepted, so it's a lifesaver to pull out that other card. And the other card has 0 transfer fees overseas.
Oh, that's good. Any other questions, comments?
I have no credit. I'm a student.
What's the best way to go about building credit?
Where to suggest, should I get a credit card? Should I take out?
student loan.
Yeah, student loan.
Well, I mean,
Gotta do it.
I think one credit card with a minimum maybe $300, $500, because you're a student, you don't have a job yet. So
the other thing I'd like to mention, by the way, we often see that if you don't have existing credit, lenders don't want to give you credit. And so often what I recommend for anyone is to get a secure credit card and start building credit. Show payment history on the card, show them that you actually have discipline, that you're able to pay the debt, and that, I think, is a great way to start building credit.
also the loan that Bethex offers, which is a gold server loan. That's the type of loan that shows on your credit report that funds are not available to you, but you have to repay. And then you learn how to manage an account, which also is a really good suggestion as well.
I was just saying to Andy that I have the Discover credit card is it's for students, so it's $1,500, but it's but for students they have really good rates and stuff like that too. And I just link it up to my debit account, so it pays it every month automatically. So it's I don't get in trouble with it.
Yeah. The other thing on the credit cards, if you have a good credit score and the rate is really high, you can call them up and fight the score, fight the rate, and they'll lower the rate because they don't want to lose your account. I've done it and it works. And I don't use the cards that have the high rates either.
Does switching banks affect your credit score? Like, say you have a brick-and-mortar institution bank, but you want to move it over to online because it has a higher annual rate. Does it affect the credit score in any way?
Are you going to be closing down the other credit card from the other bank?
From what I understand, I can keep the credit card open even though it's from that, it was, administered through that institution because the credit card is from Visa or MasterCard. So I could still keep it and move it over to online banking. Or a credit union. Yeah.
Unless you have a loan with the bank that's going to be charged off, I don't think that'll affect your credit score. So you could switch accounts, and as long as they keep your credit card open, then you should be okay.
Any other comments?
Yes.
I just have one suggestion. Make sure to read what the APR is when you're applying for a credit card. Some of them are 23 and higher. You can get some for 10.99 or even 19%. Just do your research, do your due diligence.
Oh.
And the rewards.
My wife and I both have credit cards with our credit union out in Midwest. But instead of getting awards, you can just use your credit card and instead of awards, you can ask for cash back. They'll actually credit the cash to your account. You just call up the credit union in RJ Summit. It used to be Kuhner. And it was a major amount. It's amazing. So, and there's no fee card and all that. But so, if you're using your credit and paying, a lot of people now are using their credit cards even more to get the award, the points and all that. We're just going to convert the points directly to cash. It's not that obvious, but when you ask, they'll do it for you. And they'll give you a credit on your account.
No other comments? Thank you very much for letting me assist you in the reading of a credit report. Thank you.
Thank you, Elizabeth. Thank you very much. I can see why Elizabeth gets called for every year. There's great interest in credit cards.